Nifty is opening just about 35 points down.
Right now, we're down about 0.15%.
Market, well, it's really been a very resilient market because we've had two dips and both have been bought.
The mid-cap index relative outperformers and the Nifty Bank, after underperforming for 2 days, well, it came back, and it came back in style.
Hello and welcome to CNBC-TV18. You're watching Markets Today, the show where we track about 6 hours of the day's trading action in just 5 headlines. I'm Ekta Batra. Here are the top stories for the day. Stock markets extend the winning streak to the 8th day after a late recovery. Sensex and Nifty end with marginal gains. Financials lead the charge. As crude prices trade near 6-month lows, the government is likely to cut the windfall gains tax on oil companies during the fortnightly review. Sources say export duty on diesel also likely to be reduced. Shares of Indian Energy Exchange decline after 13 states have been barred from buying power. These states have outstanding dues and may have been barred under the new late payment rules. Blackstone is the likely seller of about 14% of its 34% stake in Sona BLW Precision Forgings in a block deal. The partial stake sale leaves the option of more sell-downs in the future. Pharma slips after a sell-off in U.S. generic stocks following a dispute settlement over ranitidine, a high-risk drug. Biden signing in a law to rein in prices of prescription drugs also hurt sentiment. All right, well, those are all of the top stories that we're tracking this evening, but here's a lineup of what we have in store for you. It's a packed show as always. We'll get you expert market opinion from Mark Matthews of Bank Julius Baer and Andrew Holland of Avendus Alternate Strategies and Corporate Opinion. We get you the word from the auto sector ahead of the festive season with Shashank Srivastav of Maruti and Nishant Arya of JBM Auto. We also get you expert opinion from the energy space with VD Nanavati of GSFC. All right, well, let's begin the day, or let's begin the evening rather, with the day's market action, where the bulls did manage to maintain the winning momentum. Stock markets opened in the red after the minutes of the last US Fed meeting hinted at another 75 basis points rate hike. But the Sensex and the Nifty managed to erase the losses towards the end of the day to end in the green for the 8th straight session. Anuj Singhal is here with the market wrap.
Well, the market's texture is clearly buy on dips, and that played out today, not just once but twice. The market dipped twice towards 17,850 and managed to bounce back, in fact gaining about 100 points. The Bank Nifty outperformed, gaining about 0.5%. On the gaining side, you had names like Kotak, Larsen, ITC, Tata Consumers did well, SBI Life and SBI itself also did well. The other space which looked good today was cement, whether it was the large cap names like Ultratech or Shree Cement, or some of the mid cap names like India Cement, Dalmia Bharat, the two news-driven stocks, Ambuja and ACC, also doing well. IT was down today, taking cues from Nasdaq, so Wipro, Infosys and HCL Tech were down. And in the F&O space, we had some big movers like IRCTC, Adani Enterprises and BHEL. Now, it will be interesting to see if the global cues improve, because that was something which we lacked today. Because if we do, then a gap up is something that can take Nifty past the 18,000 mark.
Okay, all right, Anuj, thanks very much for that. Let's get in some market opinion then. Andrew Holland, Chief Executive Officer at Avendus Alternate Strategies, believes that the global equity markets are looking overbought and that there could be a possibility of some correction.
We could stay higher for longer, but it's all markets, including ours, are looking very overbought. I think the Goldilocks scenario, which people are trying to bake in, is probably not going to turn out to be that at all. So I think it's whether it's a fair market rally for us, but certainly globally, I think it is. So you could see a downtick from here because the Fed minutes were not conclusive, shall we say, in terms of what they were trying to say. So I think the Fed will have to do more in terms of rate increases and get the aggregate demand down, because it's certainly a problem, I think, for the US. The trend for the auto sector is demand is there, that's for sure, and with commodity prices having kind of eased a lot, probably will continue to ease, that's going to be the tailwind for the sector. So I think whilst I'm saying that, it could be one of those which will see some profit taking. Banking and autos and consumer discretionary are sectors which, if there is a fall led by these sectors, is where you should be picking up, because I still think the deflation trade is going to play out by the end of the year, and that leads to these sectors. So I haven't moved away from that. I'm just worried about some of the things which the market's trying to just take in its stride and say everything's going to be okay.
All right, that's the opinion coming in from Andrew Holland, but let's get in some more perspective. Mark Matthews of Bank Julius Baer & Co. said that technical factors are looking strong for the market. He added that India looks like a very good market, in fact, for investors.
I think technical analysis is very important. We as a bank pay a lot of attention to it. We have an entire research team dedicated to it. And to me, the most important thing that's happened over the last couple of months is the breadth of the market has staged a turnaround, which has really only happened, as far as we can tell, I think 6 times in the last 30 plus years. So there are different ways you can study breadth, but to cite just one, the ratio of S&P 500 stocks trading above their 200-day moving average was less than 10% back in June, and it's over 90% today. So that's an amazing turnaround. I remember 2008 making a terrible mistake because I believed that the Indian economy was protected from, the subprime mortgage crisis in America, which it was. As I recall, the Indian economy grew by over 5% in 2008, but the stock market went down over 50% because it's very linked to the rest of the world. And in a risk-off scenario, people will always have a home bias, and they will want to sell equities. So all I will say is I don't think we're looking at 2008. Meanwhile, to me, the dynamics in India are very favorable for the reasons I said before. So to me, actually, it looks like a very good market.
All right, let's get to the second headline now. Crude oil prices are attempting to recover after hitting what was the lowest level that we've seen in the past 6 months. The U.S. crude stockpile fell by 7 million barrels and the fuel consumption data was robust. The outlook for supplies remains tight, with the European Union expected to impose drastic cuts to imports from Russia.
The crude oil prices are off this week's low, but we still are headed with a nearly 6% of weekly decline. The support in crude prices came in from the decline in U.S. inventories by almost 7.1 million barrels. Markets were anticipating a decline of 1 million barrels, but you saw 7 million barrels. So that is where the support came in from. Last week was a buildup of 5.5 million barrels. But the decline also has happened in case of gasoline and distillate stocks. In case of gasoline, it has been a second straight week of decline in inventories. Also, when you look at the gasoline production in US on a week-on-week averaging, that number also has declined, supporting the prices. But that's exactly where the good news or the bullish news ends, because when you look at Russia, with the kind of oil output they still are doing in spite of the sanctions, does tell you that their earnings from oil exports is going to increase by 38% as compared to last year. Saudi Arabia also is exporting at a 2-year highs when you look at crude oil there, and they have said that they can at max produce 12 million barrels per day, and that they're only waiting for the government's yes on that. Apart from that, the Iran nuclear accord, after nearly 16 months of negotiation, also seems to be reaching some concrete negotiation right now. If that goes through, you will have some more excess Iran oil also coming into the markets. The UK inflation numbers at 10.1% are also a bit of a dampener for the crude prices. So is the fact that the Chinese everyday refining also is the lowest since March 2020. So everywhere that you look, there are more bearish factors into the market. Also the fact that the OPEC production is still 2.3 to 2.4 million barrels per day, less than their agreed quota. The only other thing that the street will watch out for is the Atlantic hurricane season that is ongoing and gets its peak in the month of September somewhere. So if you have even one named hurricane headed towards Gulf of Mexico, that is something that could keep the crude prices higher. But apart from that, it does look like that $90 is a pivot point for now.
Okay, all right, Manisha, thanks very much for that. Well, staying with the entire commodity space, gas prices continue to surge as Asian benchmark spot LNG prices have jumped close to $60 per million in British thermal units on Tuesday, which is the highest level that we've seen all the way back since early March. Commenting on the impact of the rising gas prices on the fertilizer industry, VD Nanavati, who's the ED and CFO at GSFC, says higher gas prices are impacting operations.
Gas prices are making new records every month, going up due to mainly European large-scale gas requirement due to this Russia-Ukraine conflict. Yeah, it is definitely affecting our operations, but it depends on the gas usage. So as far as urea is concerned, where majority of the gas is used by the fertilizer companies, it is a pass-through for the urea industry because government provides the actual cost of gas used in making urea production to protect the farmers and to protect the MRP that government has set.
All right, well, let's get to the third headline today. The shares of Indian Energy Exchange dropped 3% today after 13 states have been barred from buying power from the exchanges due to non-payment of outstanding dues. Abhimanyu Sharma joins in with the details on this. Abhimanyu?
Well, sources have told CNBC-TV18 that 13 states have been barred from participating in power exchanges. This has happened as per rules framed by the Ministry of Power for non-payment of dues by DISCOMs to GENCOs. Such instances have happened in the past too. Whenever this has happened, states have cleared their dues in a matter of days. However, this is one of the rare instances when DISCOMs in as many as 13 states are affected. Buy and sell transactions in all products of power market have been restricted for DISCOMs with high dues. The move under new LPS rules will be applicable August 19 onwards. The 13 states which are affected are Tamil Nadu, Telangana, Madhya Pradesh, J&K, Manipur, Mizoram, Jharkhand, Bihar, Rajasthan, Andhra Pradesh, Maharashtra, Karnataka and Chhattisgarh. Total pending dues of state DISCOMs to GENCOs are rupees 5,085 crores, with Telangana owing over rupees 1,380 crores, Tamil Nadu owing over rupees 926 crores. So clearly, dues which have mounted over the past few months have piled up, and of course, the government order has come into effect. It remains to be seen how early the dues will be cleared, which will again allow DISCOMs to participate in power exchanges.
Okay. All right, Abhimanyu, thanks very much for bringing us that important story. We need to take a short break now, but stay tuned. We'll be back in a jiffy with all of the other top stories we're tracking this evening. Welcome back. You're still tuned in to Markets Today on CNBC TV18. Let's get to all of the rest of the headlines that we're tracking for you. Well, on to the fourth headline today then. Sona BLW Precision fell over 4%. This is after Blackstone sold about 14% of its 34% stake in the company via a block deal. The partial stake sale leaves the option of more sell downs in the future. Sonia Shenoy is here with the details on this story.
Well, thanks a lot for that. It's a rather large deal that took place on the exchanges today with Sona BLW, where, as you rightly pointed out, 10.2 crore shares, which is 17.2% equity, changed hands in just one deal, worth 5,200 crores. Now, this happened at a price of 510 rupees, which is lower than the current market price, and hence you're seeing the stock gravitate towards that level. Now, sources have told us that Blackstone is likely to have sold 13.6% stake out of the 17.2% total deal that happened. Blackstone was in any case looking to raise money. They have in all likelihood raised a little over 3,500 crores through this block deal. Blackstone held about 34.1% stake as of June 2022. So a large deal is what has taken place in Sona BLW today.
Okay, all right, Sonia, thanks very much for that. Well, in more news from the auto space, auto sector is preparing itself for the festive season already as more and more automakers line up their new offerings. In case of Maruti Suzuki's new launch, Grand Vitara, it has already received a very strong response. The company has crossed 40,000 bookings in just 30 days. Shashank Srivastav, the Senior Executive Director, Marketing and Sales at Maruti, says every segment at this point is competitive.
Well, as far as the pricing of Grand Vitara is concerned, we'll start the sales sometime in September. The production starts in the last week of August. So that's the time when we'll announce the prices. Regarding the competition in this segment, actually now every segment except the lower end, the smaller hatches, every segment is very, very competitive. And the importance of this mid SUV segment where the Grand Vitara is positioned is really important for Maruti Suzuki, because that's a segment which is almost 18% of the market, and our presence there has not been there. As far as the total bookings are concerned, yesterday we crossed the 40,000 numbers.
Okay, well, let's move on to earnings then. JBM Auto shares were up close to 2% in today's trade. The company reported what was a good set of Q1 numbers. For Q1, with a strong revenue growth, the company's EBITDA and profit also saw a rise on a year-on-year basis. Nishant Arya, who is the VC and MD of the company, says that there is no slowdown in EV buses. Listen in.
No, we are not seeing any slowdown in EV buses. It's just that most of the customers always generally end up taking more deliveries in H2, second half of the year. So it is that is why we see YOY performance. That's why we end up seeing that almost all the customers are taking more delivery of buses and realizing their annual budgets in the last 2 quarters of the year.
Okay, so that is on JBM Auto, but on to the fifth story today. It's a bitter pill for pharma companies. After that, the index fell around 0.5% post a sell-off in what we saw in US generic stocks following what was a dispute settlement over ranitidine, which is a high-risk drug. That's not all. The US President Biden is signing a law to rein in prices of prescription drugs, which also hurts sentiment. So as you can see, the Nifty Pharma Index was down around 0.3%. Nonetheless, it was also the fact that a lot of the companies such as Sun, Dr. Reddy's, were a part of the settlement process when it came to ranitidine. So that was actually one of the key issues which the markets did face with. Now, it seems as though there could be more issues to deal with in the future, because this particular drug has multiple lawsuits by people claiming that this particular drug has eventually caused cancer to the people who have consumed it. So whether or not there will be a litigation going forward for the companies and whether or not they would have to pay a penalty, that is basically the point of concern. Not to mention that separately, there is also US price pressure to reckon with in the US markets, which the street is anticipating could be further augmented because of the steps which are actually taken by the US government. So the recent signing of the bill by the US president actually hasn't really impacted drug prices directly for generic companies, but the whole tone has been to reduce generic drug prices, and hence that could continue to weigh on generic drug manufacturers. But let's move on then. Wipro traded flat in today's session. The company is expected to have held back variable pay for mid and senior rung executives. Money Control reports this is owing to lower operating margins and concerns over a US recession.
Well, this is what, Money Control sources have picked up, so I'm just reporting on that. Now, Wipro has held back June quarter's flexible payout to mid and senior employees. This was a letter that Money Control accessed, which was written to the employees earlier this week. And the letter says that senior managers to C-suite employees, that's the higher end employees, will not receive any variable payout for, in the month of June, while the associates will receive only 70% of their variable payout. So, this is not negative news. But bear in mind a couple of things. One, this comes on the back of 2 very good years in terms of wage hikes and increments for the IT sector. B, is this a Wipro-specific problem, or can we hear other IT companies? While Wipro's margin performance Q1 was stark, it was at a multi-quarter low, but even the rest of the IT pack reported some margin misses. So can we now expect IT companies to perhaps go slow on the wage hikes? But if they don't, then attrition will continue to remain a problem. For Wipro, the attrition is very high, and this development, if it doesn't become an industry-specific issue, could result in Wipro's attrition going up even higher. In the June quarter, Wipro's attrition was in excess of 23%. Back to you.
Okay, all right, Reema, thanks very much for that. Well, moving on, Jubilant Food is up around 9% this week. Mangala Malu is standing by with what's driving the stock and what lies ahead for it as well.
Well, Jubilant Foodworks was among the big gainers today. In fact, not just today, this week it's actually gained almost 9% and this month itself it's gained almost 14%. The inkling is that our FII is buying this stock because back in the day it was an erstwhile FII favorite. You know, in September 2021, before the FIs actually started selling in the Indian markets, they held about 41% stake in Jubilant Foodworks, and then their stake kept coming down almost, sub 40% in the December quarter. Thereafter, it was closer to 30% in the March quarter, and in June, it fell below that 30% as well, in line with the way we saw a sell-off by the FIIs. But the stock, remember, has corrected about 32% from its 52-week high. Over the last few trading sessions, over the last 13 trading sessions, the FIIs have come back to the Indian markets and they've put 20,000 crores plus in just the last 13 trading sessions. So the belief is, are they putting their money back from where they had taken it out earlier or not? And is that what explains the kind of up move that we're seeing on Jubilant Foodworks? So that is something that we will monitor closely. But apart from that, we do have another bunch of triggers for them. The first one, of course, is that in the first quarter, their revenues as well as EBITDA jumped by almost 30% plus as compared to pre-pandemic levels. So consumer sentiment is rather strong, and this despite the inflation that we're seeing. And apart from that, and that brings me to my second point, inflation too has begun to cool off. So that is something that should aid their margins going forward. The company has appointed Sameer Khetarpal as the MD and CEO with effect from 5 years. A couple of quarters ago, the announcement did come by. So that takes away the overhang of the leadership of the company as well. And finally, the most important thing, valuations from the peak of 75 times, they're now trading mid-50s in terms of 1 year forward price to earnings. So maybe that is a bit more palatable to the FII investors who may be buying Jubilant Foodworks.
Okay, all right, Mangalam. Thanks very much for that. Well, let's move on to the big newsmaker this evening. The global CEO of Mastercard, Michael Maybach, is bullish on India. In fact, he believes India can become the largest digital economy in the world. He spoke to Shireen Ban about what he makes of India as a market and Mastercard's plans to bolster growth.
What I see today, particularly through the lens of our business, when we look at the digital economy and how it's growing in India and the growth rates of UPI and so forth, there is technology put to work at scale in unprecedented ways in India. And as a tech company and as a tech geek, I find that hugely exciting. So I'm going to go back and see there's models emerging in India that we should all think about and see what else we can do and how we evolve our business in partnerships with fintechs and other companies that are using this technology here in India.
From your strategy of buy, build or sort of partner, where does India fit into that strategy currently, and what is it going to mean in terms of future investments?
So let me just say a few things. We're not a credit card company to start with, so let's just...
that transition you've been on for the last couple of years.
Let's just baseline on that. So as a payment technology company, we kind of broadly speaking, what we do, our strategy is be in payments, whatever choice of payments is there. Like India is offering a lot more choice in payments than was there even 5 years ago. So it might have been cards, and now it's UPI, it's account-to-account, it's push payments. You want it, you have it in India. So we want to offer solutions in all those spaces. That's our stated strategy. It's different in different countries, and here in India, certainly there's more choice and bid there for that. But then that's also the question. So if you have that rapidly rising digital economy with all these different payment choices for people, how do you keep it safe? How do you keep it simple? That's another part of our strategy, where we say every kind of service that makes this simple, address the cyber risks, is your digital identity compromised, all those kind of things we take care of, and we then partner. And that comes to the partnership point. We say, on payments, there's a lot of partnerships required, for example, on nascent areas of payments, B2B payments. There's a lot of inefficiency in B2B payments, which we bring solutions to the party. Basic P2P payments, here in India, UPIs are an amazing success. We don't really need to partner on that, but the question on cybersecurity and how do you make sure that these payments remain safe as this becomes one of the, if not the largest digital economy in the world, that's a partnership area. Then you go into some of the big questions that India is addressing that many other countries will face, and that's the question of an inclusive digital economy. Hundreds of millions of people. We think there's going to be 100 million people that join the formal digital economy in India in the next couple of years.
Okay, well, on that note, it's a wrap on this edition of Markets Today. Thanks very much for watching.